Hello everyone, this is Ronen Itzkovich from skillsofthetrade.com. I'm here today with the weekly stock market analysis for the week of Monday, August 26, 2019. So here we have the S&P index, the S&P 500 index, SPX, and we are finished the last week in a downward movement over here, this is the weekly chart. Most of you, the people that I've spoke to, are afraid of recession. There's a lot of talk about recession. However, we are still generally in an upward trend. Nothing has changed really in that respect. We have an upward trend on the weekly chart where lows are being, we see higher lows, and so in that respect we're still in an uptrend, and in terms of recession we're still far away from that. Now, what we do have over the last couple of weeks, however, is we are in a trading range, or a range, where we see that we have been bouncing up and down between 2830 to 2950 points on the SPX, and so we've been in this range for the last couple of weeks, and it's still difficult to determine if we will be continuing upwards or moving downwards for some time. Now, the only thing that might be a little bit concerning is that if you look at the MACD index, we do have bearish divergence. If you look at the weekly chart, we do have a bearish divergence between the MACD histogram, where the MACD histogram has lower lows while the price has higher highs. That means we have a bearish divergence, and generally it means that we are heading for downward movement, just as we saw back in January 2018 to the peak of September 2018. We saw that we have also a bearish divergence between the MACD histogram and the MACD lines, and the price made higher highs, and we had some lower going movement for some months. So we see a similar situation here. However, it's still not a concern, I believe, because we have seen this in the past, and the price still continue to go up even though we see bearish divergences. Usually the divergences have greater significance when we see them at bottoms rather than tops. Now, if we were going to break next week or this week towards the upside above around 2950, then I believe that we will continue to go up. If we will break through the support line that we have at around 2830, we will continue perhaps to go down if we take a Fibonacci retracement from the low of the last several months. We can see that if the price will break down below this support line and close below it, most likely the prices will continue to go down to the 38.2% Fibonacci retracement, which is around 2770 units. It might continue further down to the 50% Fibonacci, or most likely around 26.12. However, if you look at the daily chart, we are still bouncing off on the 200 moving average line, which is right here. This dotted line is the 200 moving average line. So I'm not particularly concerned. However, because we are up moving in a trading range, I would hold off on long positions or short positions. I would pretty much stay off swing trades, or maybe just enter very short-term trades. Nothing for the long term, because we're still uncertain in the long run if we will continue upwards or downwards. So I hope you gained some valuable insights. If you would like to get more information about how I'm able to read charts, I did write a book called Stock Trading 101, designed for the beginning trader. It covers many of the things that I've discussed: technical chart analysis, Fibonacci retracements, corrections, strategies that I use, risk management, and much more. You can check it out on Amazon or at skillsofthetrade.com. Until next time, happy trading.